Hello, my dear valued viewers. Here is Vishalakshi Rajapantula, and you're watching 1111 Make Money YouTube channel. This is a strategy about the breakouts in Nifty. This strategy appears frequently during the downtrend in the Nifty. Now let's get into the video, and by the end of the video you are going to know about the breakout strategy and how to apply the strategy in the market. What are the results by applying these breakout strategy will be discussed by the end of this video. Let's get into the video. Okay, first of all, you have to know what is breakout. A breakout is when the price moves above a resistance level or moves below a support level. Now, for example, if you know about the CPR concept, CPR is acting as a strong support when price stays above it. Okay, when price stays above the CPR, it is acting as a strong support. Once the support has broken, this is called as breakout. See here, once the candle closes below the CPR, it is called as the breakout of CPR. Technically it is called as CPR breakout. Once the breakout happens, what actually happens in the market is the breakout happens, then all the breakout traders who are in the intraday trading will be entering the markets. For example, this is the confirmation. This is the candle that is breakout out of the CPR. Okay, this is one of the breakout. Like this, we can watch supply and demand zone breakouts, or you can watch like virgin CPR breakout. There are many types of breakouts here. Okay, for example, I am telling this. Now see here, once the breakout happens at this area, see there is a lot of consolidation because there is no movement in the price, lack of because of the volume here. So see here how beautifully it is respecting the higher this candle. Then there is a move happening here. This is called the breakout. This is an example for the breakout. But most of the time what happens is, once the breakout happens, it is going to give some retest entry at this level, and traders will come. All the traders, breakout traders will come, and big moves can happen. But we can't predict the market, we can't judge, or we can't do anything about the markets. What we have to do is, once we see a breakout, we enter and place our stop losses and targets, and just stay still whether it takes our stop loss or it reaches our target. This is how we have to be. Now I think you have understood about the breakout here. Okay, now let's get into the main part of the strategy. Red candle high breakout strategy. For example, if you see here, the Nifty is in the downtrend. Think like this, Nifty is in the downtrend, and on the day what happens, the first 5-minute candle is the big bearish candle like this. What is the first impression you get while the Nifty is in the downtrend? You feel like, yes, this is going to be a downtrend day and I'm going to short any opportunity that is giving to me. For example, you are waiting to take the trade at this area, because if you enter at the close of this 5-minute candle, your stop losses will be so high, because when you enter in a candle you have to put your stop losses above the candle if your view is bearish. So what happens when the price comes at this area? Most of the traders want to take the trade in the bearish move, okay, at this point, or if they feel like there is any rejection candle forming over here before the completion of the candle. Most of the novices enter the markets and place their stop losses above this red candle high, okay, above this candle. Then what happens here? When they place their stop losses here, they felt like, because this is in the downtrend, there is going to be a great move from here. from the high of the candle. Now what happens? There is a buying pressure that closes above the high of the candle, which triggers all the stop losses of the traders who have entered in this area will be triggered. Think of it, when you enter bearish in the market, what will be your stop losses? Your stop losses will be the buy orders. Okay, you are bearish in the market. What is your stop loss? That orders will be the buy orders. Once all the orders are triggered, there is going to be a good move in the market. This is the red candle high breakout strategy. If you don't understand completely this concept right now, no problem. Just go through the video till the last, then you will know this is the strategy that you see most of the time in the Nifty and Bank Nifty. So here, what is the exact way to enter the markets? Most of the traders say that, books say that once the high of this candle breaks, you have to enter the markets. But as per my backtesting data, as per my experience, I don't enter when the high of this red candle breaks. Why? Because when you enter at before the close of this candle, when it breaks the high of this candle, what happens exactly is there is going to be a rejection from this level most of the time. Okay, that rejection will take your stop losses. So I don't enter once the high of this red candle breaks. I wait the price to close like this above the red candle high. See, this is the line. Above this line, if it closes, and then only I will enter. After the close of this candle, I enter. I place my stop loss below this entry candle. Most likely, if the candle is very long, then I will wait to take the trade at the discount. That means when the price comes to this area I'm going to enter the markets, and I make sure that I will put the stop losses below the entry candle. So this is the entry, this is the stop loss, and your target should be your next pivot or 1:3 risk reward. Why I am saying that 1:3 risk reward? In my previous videos, if you have watched my videos, I always say that target play the certain things. What do you mean by the playing the certain things? Because you never know on a particular trading day, you never know whether it is going to be a trending day or a sideways day. Even though you are doing your pre-market analysis, everything as you could do, you can't say that. What I'm suggesting is, when you are having a successful trade, wait to take the profits at least 1:2 risk reward. Taking profits, small profits number of times, which is equal to taking one big profit. Now you have a question that why should I enter all those small profits and taking them? There is a pressure in that. So I will tell you why I am saying this. Once you are making small profits in your trading, and you are growing your demat account, you have great confidence within you. Once the confidence builds, that confidence leads to improve your trading, improve your journaling, improve your trading, improves your learning, everything. Once you don't follow this, what happens exactly? In my case, when I am aiming for more than 1:3, 1:4 risk rewards, most of the time stop losses hit. Then it is giving me great pressure that whether I am going in a right direction or not. This is the case of all the novice traders or some experienced traders. So I made a decision that I'm going to take at least 1:2 risk reward according to the situation. If there is any catalyst over there, any news or any event is impacting the market, then I will aim for 1:3, 1:4 risk reward. It is completely depending on that particular day's situation. Now, the target is next pivot or the 1:3 risk reward. But most of the time, these breakout trades will give you great profits. The experience comes here when you are going to take the profits. Okay, when you are new to the market and you are applying these sort of strategies, you have to take your profits 1:2 risk reward. So let's get into the video. What is the psychology part here? What is the psychology behind the strategy? Not this strategy, any strategy you are watching in any YouTube channel, you have to think about the psychology behind the strategy. Why? Without psychology, there is no movement in the market. For example, there is a strategy like CPR breakout strategy, and CPR breakout has happened. Why traders enter the market? Think of it once. Because the traders enter the market, the price or the volume which is needed to break out from the CPR is high. Once the breakout happens, this is an indication that the volume is very high and the traders who are in the market are willing to move the price in a bullish move, okay, or in a bearish move. Like this you have to understand. The psychology behind the strategy here is retail traders enter the market with a view of bearishness. They place their stop losses above the entry candle. Okay, once the candle has formed, big red fat candle has formed with the bearishness, they think that the market is going to be bearish on that day. This could be a trending day. Then they enter the markets and they put their stop losses above the candle. And once the breakout happens, all stop loss orders get triggered. Okay, once the stop loss orders triggers, which are the buy orders opposite to the sell orders, which leads to a big move. In the later part of the video, I am going to explain this concept with examples. Once the breakout happens, all the breakout traders enter the markets aggressively, which further leads to the big moves. Okay, this is how the psychology behind the strategy. If the move happens from higher time frame, then there is going to be a great move in the market. Now, this part is also going to be explained in the later part of the video with an example. Happens likely when? This this strategy happens likely when the trend is downtrend and the trend has exhausted. It is likely to happen. For example, 3 to 4 days the trend is in the downtrend. Okay, then suddenly there is a big candle. All the traders who have seen last 2 or 3 days have an impression that today is going also be a downtrend day or a trending day. So what happens when the trend is faded out and or exhausted? It is likely to happen. Okay, when there is a positive sentiment in the market. In the morning, the market is bearish, but there is a news or a catalyst in the market in the afternoon session. Then the price moves in bullishness. The breakout happens. At that time, it is having a great probability to move in the bullish view. Now, the third one is the RBI policy. When the RBI monetary policy has happened and that is positive to the market, so at that time this strategy happens. Then also there is a higher chances to give great profits. And Fed interest rate decrease. When you listen about Fed interest rate hike, this is decrease. The interest rates decreased by the Fed will give you good impression in the global markets as well as the Indian markets. When this happens, there is going to be a big moves in the market. The final one is when the move starts from higher time frame. Now, I'll explain this later in the video. Now let's go to here and check what are the examples here for red candle high breakout strategy. As I told you that there is a big red candle happening here and suddenly it took support at some point and there is a breakout happened here. See here, this is the line, breakout happened here and there is a move in your direction. Okay, now see, let's see what is the entry, exit and target points and what is the risk reward in this strategy. See here, this is the same chart I have shown just now. This is the 14th August chart. When the breakout happens at this candle, we are going to enter at this area, okay, at this, after the close of this area. This is the place where we put our stop losses, and this is our target. And I want to clarify one thing. In the live market, you never know whether it is going to be a 1:8 risk reward ratio or 1:3 risk reward ratio. But I am giving this example because there is a potential to take the profits in this strategy. If you follow this strategy, you are going to get good returns by the end of the month. So see here, this is the risk reward ratio, 3.94. That means around 1:4 risk reward. You risk 1% and you win 4%. Okay. This is how the red candle high breakout strategy appears in the market. Now let's go to next example here. Why I am giving this example in the sense I'm training your eyes to identify this strategy. Okay, when you train your eyes to identify a particular strategy, it is very easy to implement in the live market. That's why I always suggest new traders or some experienced traders to do the back testing of any strategy I am explaining. Once you do that in the live market, you are going to have great immediate fast reaction to the strategies. So let's get into the next example here. Now this is the red candle, big red candle, and I have placed a line at here. Once this line breaks, we can enter the markets. Okay, we can enter the markets, but in this case, this is a big stop loss. What we have to do at such times? What I particularly do is, when this stop loss is so high, I position size myself. For example, if I am trading with 20 lots, I will be trading with 10 lots only. This is called position sizing. Once you do that, your risk is limited to your predetermined loss. Okay, your risk is predetermined and it is under control. Once it reaches the target, you are going to get minimum profits. When the stop loss triggers, you are going to get controlled losses. This is how position sizing works out. Now let's see the entry, exit and stop loss here. Excuse me. And see here, why I am placing this here. Why I am placing this here? Because once the stop loss is very high, CPR is acting as a strong support when the price stays above it. Okay. Now the price stays above it. We have to place our stop loss below the entry candle, but CPR is also a strong support for the price. So you can place your stop losses below the CPR. This is how you have to do the trading. Okay. This sort of adjustments will come to you through experience. When you experience the trades in the live market and you see, you read and you have some reliable sources to you, you have some reliable mentors, then you are going to get this sort of adjustment in the live market. Once this sort of adjustments you can do in the market, there is going to be a profit running era in your demat account. Okay, see here, this is a small day, but I can say that this strategy is going to be a good strategy in your trading arsenal. Once you master this strategy, you're going to get good profits by the end of the month. Now let's see another example here. This is the red candle high. Okay, this is the bearish candle. This is the red candle high. And if you see, this is the breakout candle. Once you enter after the breakout of this candle, you're going to get a big move here. Now let's see what is the entry, exit and target and what is the risk reward on this day. See, once you enter this area, you are going to risk 21 points in the smart chart and 87, around 90 points target here. So what is the risk reward ratio? 1:4. Okay, 1:4 risk reward. This is how the red candle high breakout strategy works in the market. Now let's go to another example. See here, this is the red candle high, this is the breakout candle. After the breakout, if you enter the markets, see how much you can earn. There is a great potential in this strategy. Okay, now this is the risk reward here. See how much you risk and how much you earn. Whether you are taking your profits at this pivot or you trail your stop loss, it depends upon your personality, your psychology. I am here to discuss about the potential of this strategy. Now see here. Now I want to discuss one more thing. Whenever there is a bearish candle appearing in the market, you are going to place a bar here like this, horizontal bar here, and you are waiting to take the trade on that day, but the price didn't come till the red candle high. You can wait in the next day to break that level. Okay, next day if it breaks that level, it is having equal potential to have great profits. For example, on this day there is no price movement at this area, but the next day there is a breakout candle. See why this breakout candle is so big, bullish candle? Because when the breakout happens, the breakout traders will enter the market. But one change I have did with my experience is I don't enter once the breakout happens, high breaks. Once the candle closes, then only I will enter the market. Okay, for the next 2-3 days also it is having the same potential to trade this strategy. See, this is the risk reward that is happening here, and if you position size your trade, you can enter the trade. If you are willing to take your profits at this area, because taking decisions in the live market is the most difficult habit we could form. Once you understand that today is going to have a potential trending day, you can wait to take your profits at this area. Okay, I suggest you to take your profits at least 1:2 risk reward. Now let's go to another one. See here, this is the red candle high and the breakout happens here. There is a big move happening here. One great thing about this strategy is most of the time the red candle high strategy will be giving great profits even though there is an immediate resistance. Okay, for 1 to 2 times there may be your stop loss triggers and goes in your direction, but most of the time there is no pullback. There is no pullback and you are going to get great profits here. This is the risk reward for this one, 4.58. Whether you wait to take your profits at 1:4, 1:5 risk reward, or you frame your rules that I'm going to take 1:2 risk reward only at this strategy. It is completely depending upon your psychology. Now this is also another red candle high breakout strategy. Once the candle closes above this area, we are going to enter the markets and we place below the entry candle. Now what happened here is, see, your strategy is a great strategy and the breakout is also a great breakout, perfect breakout. Your entry is perfect and your stop loss is according to the rules. But what happened? This candle took your stop loss and goes into your direction. It happens sometimes, but be consistent with one strategy and master one strategy, then go to another strategy. This is the right process to trade the markets. Most of the YouTubers shows that they are taking 3, 4, 5 trades, 3, 4, 5 strategies on a single day, but As a new trader, you should not trade every strategy that is coming to your charts. If you do that, your psychology will get hurt, like uh, like you can't do trading anymore after 1 or 2 months. Please follow the suggestion. Master one strategy. Aim less. Okay, aim less. Just 1:2 risk reward is enough to make money out of the market. Once you are comfortable with the strategy, with the markets, with the situations, you can increase position size your profits. This is like compounding. When you compound 1 lakh rupees interest for first 1 year or 2 years, you can't make any much big amount of money. But after 2 or 3 years, the amount compounding is so high. Likewise, when you master a strategy, you are not going to get more than 10% by the end of the month. But once you master it, position size it, increase your position sizing, increase your lots, so that in the long run, about 1 or 2 years, you are going to get great profits. Okay. Now, next one. Maybe this is a long video, but I felt like this sort of information is really needed to new traders. See here, this is also the red candle high breakout, good breakout candle. You have entered, place your stop losses here, then your stop loss triggers. This is why we have to maintain your stop loss. No matter how much the strategy is giving you, or how much probability or success rate a strategy have, you should have placed your stop losses. Without placing your stop losses, without the stop losses, if you enter the markets, all your profits will be gone on a single day. That's why this is like insurance to your money. When you insure your money at the low of the entry candle, when something goes wrong, you are out of the market. Okay, think of it. If this candle continues to move like a big trending day, what could be your account? All your capital will be blown out in a single day. So I suggest that without putting stop loss, you should not trade any strategy. See here, this is also an example, and I have told you to explain that when the move starts from higher time frame, what is the meaning for this? The time has come here to explain this. When the move starts from higher time frame in the sense, this sky blue lines are these two lines are weekly pivots. Okay, these two lines are weekly pivots. The traders who trade the weekly pivots at the S1, when the trend is uptrend, so they will enter the markets after the close of this candle above the level. After the close of this candle, they are going to enter. And you don't know about this thing, you don't do higher time frame analysis. Uh, Actually, you don't know all these, no need to know all these higher time frame analysis as you are a new trader. But for example, I am telling you, when the move happens here at the higher time frame like weekly or monthly, there is a higher chances to the breakout, and the breakout will sustain. Okay, this day the breakout is happening till here. Why? I will show you. This is going to be an eye opener for you, because the every price movement, every tick has a reason to move. Now this is the 14th August. See, August. This is the 14th August one. Now I'm going to take you to the 14th August charts. See, this is the 14th August chart, the same chart you are seeing with weekly pivots. At this point, it took support, and there is a move happening here. Why this has happened like this? There is a CPR rejection here. That's why suddenly it is rejecting from that level. Now see here with great attention, and I am going to show you the weekly charts next. It is taking support at this area, and suddenly there is a rejection here. See, let's see the weekly charts with the same. This is the 14th August chart, and it took support at this area. Suddenly reversed from this area. Why? Because here there is a weekly CPR here. That's why I always say that markets are not random. They have reason for every single move. Once you assess the reason for every single move, you know that taking any trade that is coming in your way will not be profitable in your trading journey. You have to have a system and follow the system for a particular period of time like 2 months and 3 months and see the results. The novices do not follow this path and they just they trade any strategy that is coming to their way. Now watch this strategy one more time if you don't understand, and see in the live market, forward test it, backward test it, and you can see the change why you're losing in your trading. Thank you so much for watching my videos. If you feel like this video is helpful to you, please share this in your trading community, like the content, and if you have any doubts, please ask me in the comment section. And you can also join my Telegram channel where I can give more benefits to my Telegram channel members or my paid members. You can join that channel. I'm going to give it in the description section. Thank you so much.